Hi everyone, thanks a lot for the love and support shown for the first episode of Weekend with Kaushik Speaks. In this episode, we'll talk about how the dollar value is impacting the rupee value. The rupee value has been depreciating against the dollar since some time now and quite aggressively. This has prompted even the Prime Minister of India to come online and appeal to the citizens to control all actions like buying of gold or going on foreign trips that impact or put a stress on the rupee value. But do these things really impact the rupee value to that extent? Let us first understand how dollars come in and go out of the Indian market. Dollars come in when we are exporting goods and services, the businesses make money in dollars and they bring it to the Indian market to exchange in rupees. Dollar also comes to the Indian market when foreign investors invest in India through FDI, loans, equity, and debt. The RBI also, from time to time, pumps in dollars into the Indian market from its forex reserves. And the dollar leaves the Indian market when we are importing goods and services, when the investment is pulled out of India, and when RBI absorbs the dollars from the Indian open market. The RBI releases these updates as the balance of payments data at a quarterly level. We have downloaded this data of the last 16 years, that is 64 quarters till December 2025, and analyzed which all variables are impacting the dollar-INR relationship in the most significant manner, like the foreign institutional investment, the foreign direct investment, the dollar index trends, and in fact, we had separated the values of non-monetary gold imports from the current account deficit and treated them as two different variables. We ran 20 different models to test their statistical strength and finally zeroed down on this model, which was economically logical as well as statistically significant. What this model says is that the dollar-INR relationship depends a lot on foreign institutional investments, the value of current account deficit without gold, and the value of the gold imports. If you deep dive into this equation, it reveals something really interesting. Take a look at the intercept value of this equation. What it says that inherently INR is depreciatingly related to the USD at a rate of 40 paise per quarter, and that is the major chunk. The second biggest impact is from the foreign institutional investments. Every $1 billion invested through FIIs appreciates the rupee by 12 paise. The non-monetary gold value and the current account deficit values impact in the range of 5 to 7 paise per quarter per $1 billion. So the bottom line is gold and current account deficit do have some impact, but the biggest impact is from the foreign institution investors or the FIIs and the inherent depreciating nature of the INR against the dollar. So back to the question. The rupee has been declining sharply against the dollar since 2025. But why is it happening? If you compare the trends, the current account deficit and the non-monetary gold imports have been either flat or better off in 2025 over 2024. So what has flipped? And that is the foreign institution investments. The foreign institution investments have dried up in India since October, November, December quarter in 2024 and have not reverted since then. This is exactly the time when the US elections also happened. And the drying up of FIIs is the fundamental factor plaguing the INR since 2025. And this needs your focus. Thank you, and that's it for this week. Please like, share and comment on this video and don't forget to subscribe to the channel. The video was shot and produced by Anvesha. See you next week.